The March unemployment figures just came out and they came in stronger than estimates, coming in at 303,000 compared to the 212,000 economists estimated. And then the unemployment rate ticked down from 3.9 to 3.8%. Job gains were also added from the prior couple months in terms of revisions. This shows that the labor market is very strong still. The downside of that is that means that the expected rate cuts from the Federal Reserve, they were thinking 3 rate cuts for this year, might not happen, and that those might be delayed perhaps into the third quarter, fourth quarter, or maybe not at all if the economy proves this strong. But in my opinion, I don't think that really matters. It's more important for the economy to stay strong and resilient. Before COVID, it was very rare for the economy to add over 300,000 jobs in a given month. It didn't happen too often. And the fact that the economy is doing that with interest rates this high and above 4.5%, I'm sorry, about 4.4% for bond yields and interest rates at about 5.25% to 5.5% from the Fed shows the economy is very strong and resilient, and shows that the tailwinds for tech and AI and the productivity gains from that are stronger than the headwinds from rates higher for longer. This is good news, in my opinion, that the economy could stay this strong and resilient. Labor force participation also picked up from 62.5 to 62.7%. And then average hourly earnings increased 0.3% month over month and 4.1% year over year, which was in line with estimates. So although this shows that the jobs report was hotter than expected, as I said, there might be, I'm still viewing that as overall good news that the economy is staying this resilient. Maybe good news will be good news again for the stock market. Yesterday, we had a sell-off due to geopolitical tensions in the afternoon, as well as Fed talk from a few Fed governors talking hawkish. For instance, Neil Kashkari said it's possible that the Fed might not need to cut interest rates at all this year. So I think part of the rally today is because of the sell-off yesterday afternoon, but also because the markets are viewing are viewing today's jobs and unemployment report number as strong, and the economy is really resilient right now.